You know that feeling when you drive a brand new car off the lot, you've got the keys, that new car smell, and you absolutely need proof of insurance right then. It's instant mandatory,
Right.
part of the deal, yeah. But okay, what about when you buy, say, a piece of vacant land? Seems quiet, untouched. You just picture, I don't know, open space, maybe some trees, nothing really happening there. It doesn't exactly scream high risk, does it? Yet, we're seeing mortgage lenders increasingly demanding a specific type of insurance for it. And this isn't just some quirky new thing. It feels like a real shift. So my question is, why? What's the hidden risk here that's making banks insist on specialized coverage for something that looks so, you know, so harmless?
That's a really great observation. And it points to a fascinating area of liability that honestly many people just overlook. The thinking behind this trend, it isn't just about protecting the land itself,
Right.
or even the dollar value of the loan. It's really about a growing and often kind of unseen exposure to risk. So for this deep dive, our mission, basically, is to give you a crystal clear understanding of these liabilities linked to vacant land that people often ignore. We'll explore exactly why mortgage lenders are so focused now on needing this insurance, what specific dangers actually exist that make it crucial, and ultimately how this specialized protection helps not just the landowner, but importantly, the financial institutions too. We're going to sort of pull back the curtain on the what ifs that genuinely keep lenders up at night and what that means for you if you're thinking about owning vacant property.
Okay, so when a lender gives out money, whether it's for that shiny car, a house, or, yeah, a piece of land, their whole business is minimizing risk. That's obvious, right?
Yeah.
But for vacant land specifically, what kind of non-financial risk are they really trying to avoid? This isn't about the land maybe losing market value.
Mm-hmm.
It sounds like it's something else entirely, something more personal,
Mm-hmm.
more legal. What's really shifted to make this such a pressing concern for them now?
Yeah, this gets us right to the core idea of shared liability, or maybe more accurately, vicarious liability. Let's loop back to your car example for a sec. When a bank finances your car, they're the lien holder, right? They have a legal claim on that car until the loan's paid off.
Right.
So if that car is involved in an accident and there's negligence involved, the bank, because they have that vested interest, can sometimes get pulled into a lawsuit. Well, the same idea applies directly to vacant land. Maybe with less obvious triggers, but the principle holds. When a lender provides that mortgage, they take on a financial interest in the property. So if someone gets hurt or their property gets damaged because of something seen as negligence by the landowner, the bank holding that land can absolutely be swept into the lawsuit that follows.
Mm.
And, we've seen a definite uptick over the last decade or so in these kinds of premises liability lawsuits, especially in rural or undeveloped spots.
Hmm.
It's not just random stories. There's a real legal trend towards holding property owners to a higher standard, even for hidden dangers. The potential cost for lenders in these